Thank you so much for meeting me today. And today I wanted to start by asking you a question that we spoke about last week when I was talking to you about your newsletter, which I found very interesting. I want to start by quoting you, and this is the quote. Here's the thing about energy markets. They rarely move in straight lines, but every so often you get a year that doesn't just extend the curve, it bends it entirely. 2025 was a year that overturned a decade of consensus and forced everyone to rewrite their assumptions. What does that mean?
I think it's quite a big question. Mm-hmm. So I've tried to summarize it, and I've tried to summarize that usually, energy evolution is quite slow. Mm. But last year was the one that actually hugely disrupted how things have gone in the past few years. Mm-hmm. So, energy is always going up predictably. You have demand going up predictably. You have supply going up predictably as the world enriches itself, incomes rise, etc. But last year was different. Mm-hmm. Because we had three major, I would say, trends which appended what had been a consensus, at least for a decade, mm-hmm. a consensus towards energy transition. So the biggest disruptor there was the election of President Trump and what he decided to do by putting in 14 executive orders to actually change the way how U.S. energy markets worked. Mm-hmm. The second one was the really unexpected rise of artificial intelligence, mm-hmm. which nobody had forecast, that suddenly you almost had demand, which was almost equal to the energy demand of Germany, electricity demand of Germany in just 1 year. And the third one, which I think is a bit of a good news, so you've got a demand shock, a policy shock, and I think a good technology story is how batteries, which used to be about 250 kilowatts dollars per kilowatt hour just a couple of years ago, suddenly came down to $70 mm-hmm. because of oversupply in China, but also a lot of great manufacturing expertise that they have built and the technology that they've improved. So in a way, the trend which we had all been experiencing for the last 10 years suddenly changed, and that has changed quite a few things because the political consensus mm-hmm. on energy transition, I think for the most part, at least for the next 3 years, till mm-hmm. President Trump is here, we can forget about it. And there has been a lot of change, which you saw in COP29, you saw in COP30, which actually is sort of bad news for the planet. And then this energy demand, which nobody is able to fulfill, it is going to change how we cost energy, who pays for it, etc. So I think those are the three trends that I wanted to pick up on mm-hmm. and said.
I want to go into those in a bit deeper level individually later on, but I also wanted to ask you about, you framed it very interestingly that you see the energy transition debate has gone from one from vision to kind of arithmetic. It's gone from being one based on ambition to one that's maybe based on numbers and economics, which is quite interesting. And actually, I listened to the podcast you did a couple of years ago, and you mentioned quite a frustration at you felt that not enough was being done to push the energy transition forward. But you did also say in your newsletters that this change that we're seeing now isn't necessarily bad. The energy transition hasn't necessarily gone away. It's now just changed in the way we're moving forward. So how's your thinking changed, or what's adapted in those couple of years that you're thinking about now?
Yeah, so I think, look, for me, I've always believed that energy is a game of cents, not dollars. Mm-hmm. And one of the challenges always when you have policy interventions where governments or mm-hmm. politicians start driving the energy agenda, the loser eventually always is the consumer, mm-hmm. Because they end up raising prices, they end up pushing their political agendas, which sometimes are effective and positive, but sometimes, and in most times, it's what I've seen through my experience working in developing markets or working in mature markets. It's always when a politician gets on a horse, the ending is not the best one. Mm-hmm. And therefore, when it goes back to the economics, it's actually a real sign that the business will have to work hard to sustain itself. And I think the energy transition, particularly the progress we have had on technologies, the progress we have had on the cost of energy transition, the technology can now stand on its own. And therefore, by getting off that political agenda and making it more about economics is actually a good outcome for both the consumers, but also for everybody, because then that doesn't go away. And it does address those three, which we call the energy trilemma. I call it a quadrilemma, which is, I call basically, affordability is number one on consumers' minds. Number two, we have, security, energy security, which is on everybody's mind, energy sustainability, and I think the economic impact. And sometimes when policy interventions happen, they forget affordability and they forget the economic impact, and they focus too much on security and sustainability, which is the right thing to do, but you also have to balance the other two as well.
And talk to me about the quadrilemma. I've always heard everyone speak about the trilemma, but you're the first person that has called it the quadrilemma. Talk to me about how do you separate the affordability from the economic side that you just mentioned? What's the difference between those?
Well, I think the affordability question is always about reducing the cost, but you can have cheap energy. It's a balancing equation. There are four legs in this equation. So if you do a lot of energy investment, so I'll take the example of the UK. UK has single-handedly developed the offshore wind industry, at least in Europe, perhaps the globe as well. It has been the biggest consumer of that technology. But UK, if you look at the economic impact and the jobs that have been created, they've mostly been created in places elsewhere. Okay, so effectively, yes, you have operating jobs, you have some limited manufacturing jobs, some installation jobs, but most of the jobs have been created elsewhere. And as a result, what I used to hear a lot in the Middle East was, the governments there were much more concerned about what impact you're going to make. So you're going to put a gas turbine here, what impact are they going to make? And I think that's the quadrilemma part, which is about how much impact you have on jobs, on local economy, rather than importing everything. You can import everything, you can... all the UK has to do is to just connect a wire to France and get all the energy they want, but it's balancing all those four together.
Interesting. And I think as well, to give people a bit of a brutal reality check of where we're at, I want to speak about the numbers. So I've taken these from your newsletter, so I hope they're correct. Today we've got demand for oil is 104 million barrels of oil per day. That is going to increase to 113 by projected 2050. We've got 4,200 billion cubic meters of gas. That was for 2025. 8.85 billion tons of coal annually 2025. 38.1 gigatons of CO2 emissions in 2025, and also on the other side, almost 800 gigawatts of renewables added, driven by China globally. So if you'd have heard any of those statistics a couple of years ago, a while back, would any of those statistics have surprised you?
No, because a couple of years ago, the market had moved quite rapidly altogether towards economics, so it was moving towards economics, but there was already enough forces in play that would have gotten you to that outcome. What has surprised me has been the resurgence of oil and a little more on the coal, because, we've all been forecasting for the last few years, including me, and I've made mistakes as well, that coal is going to collapse, coal is going to go away, because if you think about that 38 gigatons, coal, every time you use coal, you have an average of twice of CO2 emissions. So coal...
So one ton is 2 tons.
2 tons. So effectively, that is... that large part of 38 is that...
It's just coal.
Is majority 16 is coal, or it's 18 is coal right now. And the goal should be to actually really take this demand off. And that's what the focus is. So, you see China particularly doing that. They're very focused on coal in terms of their energy transition. The United States is actually supporting it. Germany a few years ago supported coal by shutting down their nuclear. So it's a big play which we need to focus on. and hasn't been focused on. So I think that should remain a priority for the next few years for electrification. Now, but with the AI demand, we have a question around there as well.
Mm-hmm. And so where does coal come into the future? Because, of course, it's probably, as you said, if we want to reach net zero, if we want to reach these kind of energy transition goals, coal is probably the number one thing that needs to go. I remember you said in your podcast that if we're going to reach the last episode you did in 2023, it has to go coal, oil, and then gas are the focus areas we've got to go. So how can we move towards a place where we can get rid of coal, considering all the geopolitical and all the demand factors that we're experiencing at the moment? How does that look?
Well, I think it's actually happening quite rapidly per se in a lot of markets. So I'll give an example of Pakistan, where I myself am guilty of selling a few coal plants to that market. I got the opportunity of doing 3 gigawatts of coal projects there, and we sold those to investors. Now, majority of the coal plants are sitting idle because the market has moved quite rapidly towards solar, and the electricity demand, at least from the grid, has collapsed quite significantly. And pretty much everything that's been shut off first has been the coal plants because they are unable to ramp up and ramp down versus gas, which can go up and down quite quickly. You can start up a 1200 megawatt gas plant from 0 to 30 seconds to full capacity. Coal, it could take you a full day to get to that level. So I think coal is out of place. I think China is the one who's working the hardest. They're the largest consumers of coal. The second one is India. India is the second biggest consumer of coal. So I think in both markets, I have hope that just the economics of renewables will actually make coal redundant. And China is pretty actively doing that. But obviously, you have to balance the economic impact. So if you suddenly take coal out, you kill provinces, you kill the jobs that you're there. And that's the Quadrilemma part that I'm talking about. Absolutely. So you actually have to balance that. So China plays that at the same time. So they keep on sustaining some coal while at the same time moving very rapidly towards renewables.
Now, one debate I like having with my guests is around the framing of the energy transition. Because actually, as I'm having these conversations, more and more, I'm actually not convinced that the phrase energy transition you might disagree with me on this, so I'm happy to discuss. The phrase energy transition, I'm not sure it fully represents the situation we're in. If we look at history, the energy transitions of the past, or the energy transition as a phrase tends to point to substitution. So we're substituting the original source of energy for a different source. Whereas if we look at histories from coal to oil, and now we're moving to oil to an electrified system, it's more a debate around accumulation and addition, right? So I want to ask you, what's your take on that, what I just said? Do you disagree with me on that, or do you think we do need to maybe find a better way of maybe framing the issue? Because I think that framing does come into some issues that people that maybe aren't so involved in the industry understand it as a substitution. Of course, we understand that it's, we're adding on top of what we already have. But I think that framing, especially in common dialogue, does create some problems. Is that something you would agree with, disagree with?
Yeah. So the challenge is fossil fuels still account for more than 82%
exactly,
of our energy demand. Okay, primary energy demand. But what you also have to keep in mind is that we are seeing transitions happen. And where they're not happening is because of either political or economic or, the jobs impact, social reasons, where it's not happening. So I'll, just a simple example. If you allow everybody in the UK, every business, for a few years ago, I was trying to put solar panels on a factory that we had in the UK, and the planning permission to go through that is quite a complex process. You have to put up an NBSM. It was a brownfield site. It was not as if you're doing, but the moment you deregulate those kind of constraints, energy transition would happen quite fast, because if you do simple economics, electricity on the grid in UK is about 25 pence per hour. An average household consumes around 3,400 kilowatts of electricity every year. So that's, give and take £1,000 they spend on it. By putting on solar panel and actually also substituting their gas, they can almost get to zero with an investment of between £8,000 to £10,000. Store that investment, so not even have to rely on the grid. And that would, in a way, destroy a lot of the grid models that exist right now. So the governments are also trying to balance. I mean, one of the big challenges, for example, in many markets which have accelerated that, is that their whole grid system has now become bankrupt or almost close to bankruptcy, because effectively they are not able to pay for the whole cost of the system. They have long-term contracts with fossil fuel suppliers. They have long-term contracts with people who've made the grid investment. And therefore, if you open it for all, it actually leads to a very quick collapse of the existing energy system. And I think that's the challenge that you always have. So you're always making those trade-offs, would it be economic? So renewables is affordable, but you can't shift it till you open the policy and change the game. So answering your question, probably it's a longer answer on that one. The simple answer is, it's still going to take some time to substitute 82%.
Of course.
But if you break down the components which are unsubstitutable or difficult to substitute, of which technologies don't exist, I think you still end up with 50-60% of energy being renewable, and without the challenge of doing that. So, you can't replace oil and gas and chemicals, feedstock. You cannot replace them in aviation fuel for now. But 60%, 70%, you can still achieve that. And I think that's what we should be aiming for. We have the technology, we have the capacity, we have the ability and to do it, but we haven't done it because of those constraints.
I guess it's the classic, oil and gas will become a smaller share of the overall pie. And I wanted to ask you as well about the resurgence of big oil that we've seen this year. So of course, you worked at Shell for 17, 18 years. And when I speak to my friends, I went home and I was at the pub and, they've seen I'm doing this. So they started asking me, why have companies like Shell and BP kind of gone back on kind of their beyond petroleum kind of agendas and moved back this year, which we've seen the consolidation of that move back towards kind of traditional business. Can you give them, people that aren't necessarily in the industry every day, an explanation of why that's happened and kind of the market factors that have brought that back?
So it's always about arithmetic, as I said. If you can make a 10% return on an investment and you can make 5% return on another investment, which one will you choose?
The higher one.
Exactly. And I think that's what oil companies have done, because their shareholders were, and that's also part of that whole energy transition ESG shift, because they were under shareholder pressure for the longest time to move towards cleaner energies. But the moment the pressure goes, it's all about arithmetic. And, if you look at me, if you look at yourself, if you have your money invested in a pension fund, would you like to make a 10% return or a 2% return? I think the answer is 10%. And that's really what's driven their move back towards oil, because they know this very well. They've been doing it for 100 years. They can just keep on replicating the same thing that they've been doing and make a good return to it. Now, I would reckon that it is not probably a good choice because of that, because in the longer run, that whole business is on a declining trend and it will eventually disappear. But in the shorter term, it is actually a good return for their investors and themselves.
Okay. Interesting. I think that's something that people don't necessarily always get an insight on, so I wanted to ask that. And now I want to go into kind of the newsletter. You said that the three factors that have really fueled the changes that we've seen in the energy system in the last year are Trump, AI, and batteries. And I kind of want to go through each of those. And they're, of course, linked to what we've already spoken about as we started this. But let's start with Trump. He's kind of as you just mentioned there, he's been the one that's kind of led to the collapse of this political scaffolding, as you called it, that has held up this consensus. And often Trump is known for his rhetoric and his headlines, but actually these changes are quite structural as well. So take me through what your outlook is on the changes that this has caused and what's kind of the effect that's going to be at longer term.
Yeah, so unlike his last term, where it was a lot of rhetoric, I think this time around, Trump has been more taking action. And I think, as I mentioned, they've, in my article as well, 14 different executive orders from, diluting the environmental protection regulations to stopping building of offshore wind, to unwinding the Inflation Reduction Act that Biden had put to incentivize investment in renewables. He's taken 14 different actions so far, as I've counted, to actually unwind those. And that has had a huge impact because in the US market, a lot of the renewables development was driven by the production tax credits, which is where you make an investment and you get a tax credit and you benefit out of it as well. So he has taken that very strong action. Now that's where I say, and he's very clearly signaled. The most important thing he's done is he's signaled to everybody who is in the corporate world, this is not where I want you to go. And that is what the impact has been. So I think that signaling is quite important. But as I said, if you look at last year's results, solar has continued to be the largest expanding capacity in the US. And as somebody said that, no one can stop an idea whose time has come. And I think that's the issue with this. So if you have to solve the data center demand problem, you will have to look at renewables because they're the fastest one to deploy. You can get it done in a year, et cetera, et cetera. So I think in a way it counters his, but on the other hand, it does provide a lot of support to fossil fuels and oil and gas to take them further.
Okay. And AI, of course, is kind of the topic of the day. Everyone's talking about AI, but what I found quite interesting, of course, what you mentioned is that it's not necessarily the amount of energy we're going to need. Of course, everyone now understands that, but it's the fact that companies and utilities are now having to make very long-term decisions in the matter of months, and that's what I hadn't even realized, that the speed that these decisions have to be made, because it was what you said as well. We have the power generation, the ways of making the power, but not the cables to deliver it to the final consumers, right? And AI, of course, is going to accelerate the need to create those connections to get the energy to the final consumer. So, talk me through that issue as well, and what challenges that presents for the industry and for the companies operating there.
Yeah, so I think the big challenge, obviously, is the total headline demand. 500 gigawatt hours. That's bigger than Germany's total demand. So you need that in the next 3 to 4 years. Now, if it takes almost 10 years to build a gas power plant or an offshore wind plant, here 5 years or 7 years, 5 to 7 years for wind plant. So in effect, that demand just coming up faster, and all the AI investors, they want to invest today and start using their models the day after tomorrow. That's what the challenge is. Now, energy systems are not designed to do that.
Exactly.
They're designed to actually go in a standard. You sit down, you plan for next 10 years. You say, this is where I'm going to put the pylons. This is where I'm going to put a grid station. This is where I'm going to put a power plant, and then I'm going to connect them. So if you look at UK, for example, UK has just given their Rio 3 determination. Ofgem has just given their tariff determination. It's a 5-year plan, a huge amount of investment, 70 to 90 billion, whatever the top line number you hear about. And you have that plan, and then 5 years later, we'll be able to connect some of the offshore wind that we are putting in the North Sea. It doesn't work this way. So in this case, it's been a rush to whatever it is. So I'll just give an example. Siemens Energy stock was about €7.5 at the end of 2023. It's now €150.
How much was it in 2023?
I think it was €7.5 was the minimum.
Because they went through a bad patch around.
They went through a bad patch because of their wind business, because that was collapsing. And that was €7.5. Now it's €150. I just looked at it yesterday. And it's all based on the anticipation coming from The grid investments that are required, they're clearly a leader. In grid investments, they're not a green leader on gas turbines, but because gas turbines are flying off the shelf. A few years ago, nobody was buying gas turbines. Nobody was putting in any more gas turbines, and now they're just flying off the shelves. So OEMs are saying, okay, you have to pay me $1 million today to book it, and I'm going to sell it to you for $2 million. So I don't, a few years ago, that was, I did projects where the all-in EPC costs, and this is public data, was less than $500 per kilowatt or $500,000 per megawatt. And suddenly the cost has gone up. So everybody is actually pumping that up. And that means that it does raise the question around sustainability, because the biggest cost of data centers after they've been put up is energy. But the thing is, energy still remains a small part, because now the chips have also gone up, and we see the NVIDIA impact as well. So I think the problem is quite three-pronged, I would say. We never planned for this demand, so we neither have the grid capacity, we neither have the generation capacity, the turbines, whether it's wind or solar, to do that. And the third one is that we don't even have the infrastructure to actually put up these plants in locations, because a gas power plant, large one, will need water, clean water, to cool itself, etc. So all of those things are not there, and you're trying to build very fast. So it does create a big jam in all the supply chains everywhere, and becomes a challenge.
And what does that mean for the next couple of years? How does the industry overcome that? Because we can't just start building things quicker than we can, right?
Yeah, so I think two or three things. Countries which have greater energy capacity will be a big player in the data center space. So China, for example, I was in Huaning's, just before COVID, I was in Huaning's central control room. I mean, their capacity utilization, the amount of capacity they have, was only 34%. So China can ramp up any amount of AI capacity, provided they want to do it. They're not doing it so far, but if they want to do it, they can ramp up.
Essentially, they already have the capacity.
They already have the capacity to do it. The second one is, what has changed this time round is, because both with the inference and training loads, previously in data centers, when you and I go onto our phone, we want an instant response. So there's no latency. So we want data centers right next to London, right next to, where the city is. Because these inference and training loads now, when you click on something on your chat GPT, it takes a couple of seconds, sometimes 10 seconds, 15 seconds to do it. You can now place data centers further away from the demand, but closer in energy surplus regions. So if you think about it, one of the ways of bypassing this is actually putting in places. So you can go into Norway, for example, which has surplus energy in a dam which is not being used, and you can plonk your data center there. Probably you'll benefit on cooling, and then you can connect London and still service it, and the customer will not complain about it because the latency. So I think those two things are probably the biggest value drivers for those who need immediate energy. Those who are trying to put up more energy, I think it's going to be very difficult over the next 5 years. I mean, every OEM you talk to, they're saying our order books are full till 2028, 2029. We're not taking any more orders. So, they're going to charge you an arm and a leg for doing this. So I think that's the trade-off that you have. And then there is a wider question whether all of this demand or AI built is necessary, which is an underlying risk in all of this as well.
Because that's coming from if you're referring to if they manage to build AI models that don't require as much energy, correct?
Well, that's coming from the fact that you may build too much infrastructure,
right? Okay,
oversupply the infrastructure, and then there are improvements in software or how the models. So, like the Chinese have done with the QN or DeepSeek, can you actually replicate it with other models and do that? And then there is a broader issue about whether all this the AI demand is realistic, or whether it would be much smaller or much more focused. So I think in some ways, it's kind of a big play.
Mm-hmm.
For us as consumers, by the way, it's going to be another challenge because it is going to raise prices.
Mm-hmm.
And if you look at auctions recently, prices are rising. There's already in the US, I think it's mentioned in my article, I don't have the number off my head, but US inflation in wholesale electricity prices already has been 8% this year, or close to 8%.
Yeah, that's correct. Yeah.
And that means that we will see more of consumers actually getting hit with the cost for AI data centers.
Mm-hmm.
So there was a recent discussion where Trump has said, for example, that PJM needs to auction their AI demand separately from the grid demand because he doesn't want the people to actually pay for it.
Mm-hmm.
So I think that's what we're going to see. So we're going to see rising bills for the consumers, which will create another backlash potentially for AI as well. Because, if your bill goes up 10% because of AI, you're going to make some noise.
Of course, these are always the kind of twos and fro's we have with any kind of energy. When you talk about the Ukraine war and the effect that had at the time, and I think it's something I guess we have to get used to, but it's not ideal. But the third area you spoke about that is linked to, of course, the AI due to kind of the transmission issues that are involved with renewables, with solar, with wind, etc. Batteries. Global storage investment reached 66 billion in 2025, and over the last 2 years, their cost has gone down by 70%. Before I read your newsletter, I hadn't realized that happened, and that's quite big numbers. So where do we stand on that? And of course, I wanted to ask you as well: do you think storage is the key to kind of the pace of the transition? Because of course, we have all these ways of generating more energy, but often the problem is the transmission, and storage BSS systems are the way that we can kind of bypass those issues. So how do you look at storage and kind of the big developments we've seen in 2025?
Well, I think storage is one of the big transformative technologies. I didn't expect prices to fall. I mean, there was in 2020 when I was looking at it, we were expecting prices to reach around $140 or $125 per kilowatt hour. Now they're reaching $70. So thanks to
that's pure technological advancement,
pure technological and manufacturing advancements. But the scale of build in China in terms of manufacturing, there's like a battery company at every corner and perhaps every province there. So the scale of the battery build, the learning that they've done a few years ago, battery prices shot up, lithium went through the roof, etc. But what they've done is they've made systems more and more efficient. There's been greater supply of lithium coming into the market. Recycling has improved. So effectively, they've been able to manage that cost element and really through manufacturing and technology improvement in that. Now, what does it do overall? I think the big change that has happened is that one of the biggest issues so electricity is a commodity. It's like an airplane ticket. Once the plane takes off, the seat has no value. So that's how electricity markets work. And you have to have almost match demand with supply instantly, because otherwise, you would do it. So if you're above in terms of the production, you lose your production, and that's a big curtailment issue in a lot of markets. In the case of batteries, what has happened is that we have, because the cost has come down, you can now store renewables much more and actually replicate the benefit that fossil fuels had. So with the case of fossil fuels, you could store gas, you could store oil, you could store coal and switch on your power plant whenever you want. So there's a big project in Dubai, which is a huge project that they're undertaking, where they've put in, if I'm not mistaken, around 5.6 gigawatt of solar, about 21 gigawatt hours of battery storage, and to create a 1 gigawatt hour baseload power plant. Now they have a lot of land, they have a lot of desert to put it in, and they also have a great solar resource with insolation rates of plus 20%. So effectively, it creates a perfect solution for them, where they can almost replicate a baseload solution And this is perhaps also one of those solutions which could drive more investment of data centers in places like these where you could build very quickly and do that very quickly. So that project now replicates a gas plant. Now, gas plant prices have gone up quite as well. So, I'll quote a UK government number, although I don't agree with it. But they've said, if you put a new gas plant, it's 147 pounds per megawatt hour, when they recently released the offshore bid results. So if I take that number and you make this kind of an investment, you actually make a better return.
What do you think the number is on the gas plants?
Well, I would not hazard the guess right now, but yeah, I mean, UK has, I mean, I've sold gas plants in 2019. The gas plant that came online, the gas price was about the same as it is right now, and we were able to achieve about 5 cents a kilowatt hour on those gas plants. Now, arguably, now gas prices, as I mentioned, because of AI, gas turbine demand have risen. So there is, and UK has a higher cost of doing projects, let's say, versus in East Asia or Asia. But yeah, I mean, I think you can make very good returns with those kind of solutions there. But the big change I think that's going to happen is, and it's not going to happen in the developed world. It's not going to happen where people have already a huge amount of grids have been invested in, where there's already a lot of change in generation existing, which is old style fossil fuel. The big change is going to happen in the global south, because those countries now have an option.
Off-grid solutions. They don't have to connect to the grid.
They don't have to connect to the grid, or they could have a very weak, very low capacity connection to the grid. They are mostly, in most of the population in the global south is in what you'd call high solar insulation areas, and you can actually put that in and do it at a very cheap cost relative to the rest of the world. But I mean, that's a sort of a big change, and I think that's going to change a lot of things. I can tell you, there's a lot of industrial customers I had who used to have gas engines. They're all moving on to solar and batteries and wind to actually run their business, and it's actually cheaper and more cost effective and affordable.
And in terms of implementing these technologies, these storage systems, is that pretty simple? Is that pretty seamless? How does that work?
It's much more simpler than a gas turbine. So you just put a solar panel, and these all come containerized, and you just put them on the side, connected. Yes, there is a need to create a microgrid, because you still want to have the backup from the grid or have some of your diesel generators or gas generators connected to it. But it is easy to do. I think the big constraint is land. So if you're trying to put in solar, to do that 5.6 gigawatt, I think they almost had to do somewhere around 15 or 20 square kilometers of land to actually put that in, which is what will constrain it in most other markets. But in the global south, where land is quite ample, especially in places like Africa, you could do it at a much more cost-effective manner.
And that's very interesting. And one thing you mentioned as well is that batteries have kind of these changes are taking place with batteries, but also you called them in-between technologies, like offshore wind, green hydrogen and stuff have stalled a little bit, and obviously this is because of the bankability kind of things. What stage are we at with these kind of technologies and energies? Yeah,
so I think, look, I would say we are very in the early stages. There was a lot more hype initially. So the last 2 years ago, if you would go to a conference, people will say, okay, sustainable aviation fuels is coming tomorrow, billions going into theirs, hydrogen is coming tomorrow. And obviously, it goes back to arithmetic and the game of dollars, not cents. If you're going to sell me, if I can buy kerosene at, $1 and I have to pay you $5 or $7, it's not economic for me, and I would not make the transition. And that's how the energy markets work. So I think that reality check has come into these technologies. I think there is some opportunity there. So there are now there is a lot more focus on actually making them efficient because it's no longer policy driven.
Of course, yeah.
It is no longer
it's what you
political.
talk about. It's like the transition entering adulthood. I love that phrase because it's like we're not just doing it because we want to. It's because now it needs to follow like kind of instead of following an ambition, that's following a path, a pragmatic path to get to it, I guess.
Exactly. Because, you can't be just saying, okay, we're going to do this. We're going to do 5 gigawatt of hydrogen and everybody's going to sign up to it. And we're going to put in on ships. We're going to convert our pipelines into hydrogen pipelines, which, is a fairly complicated thing to do. So effectively, what you have to do is you have to almost go back to the basics, say, does it make sense? Why is it not making sense? What do we need to do to actually for it to actually become economical? This is the path to doing it. And I think that's the direction now most of the players are going, because once you stop relying on crutches, then it becomes clear on what you're going to invest in, what you're not going to invest in, and that drives. Now, I'm not saying not having policy mandates is not essential. It is essential because that establishes the initial market. So like with wind, like solar, a lot of it would not have been developed if there weren't policy mandates or there wasn't a policy push for this. But from my perspective, the better option for the government is to actually directly fund those kind of developments and invest in companies that do that rather than actually pushing it on to the consumers.
Okay. And one important thing I think happened this year was kind of the blackouts that we saw in Spain and one in Dominican Republic as well. And there was a lot of fervor around what the hell happened. And there's a lot of people blaming renewables for that. I may have been wrong doing that as well. But and this is a question I get asked a lot as well. So can you explain from your perspective what is it that happened there in Spain and in mainly Spain? Also, we can talk about Dominican Republic. In Spain, in 2024, renewables were 57%. At the time of the blackout, it was 71%. But of course, it links to what we've said already, that it comes back to the issues with transmission that we have. So can you explain to people what exactly went on in Spain?
So I think it was an interesting, and look, everybody blamed renewables, but grid failures are not because of usually the generation sources. So if you think about it, grids are a fairly complicated, it's one of the most complicated things, complex systems that we have developed. And it is very precisely balanced. So in Europe we use, and most of the world, we use a 50 hertz frequency, we use a 60 hertz frequency. And
explain that to people. So that means the energy coming in. Explain that, because I'm not a technical expert either. I studied international relations, fell in love with energy and oil and gas and all this stuff, but I'm not an expert in how these things work. So explain to people how exactly.
So the way it works is most of the energy that is generated is direct current, DC. You might have heard of this. So all of our laptops use DC power, but I think almost 100 years ago, when Nikola Tesla and G founder, what was his name? I'm forgetting, surprisingly, at this point. But they fought a war, and he was pushing for, and Nikola Tesla won, and we actually moved to an AC current sort of a thing. So what happens is all of the direct current is actually converted into an alternating current. So it's a sine wave, and it's perfectly balanced. So if you think about it, you've got demand coming from one side, supply coming from one side, and there is a very perfect balance. So both waves, both supply and demand have to mirror each other. So if you think about a wave going through, they have to mirror each other to actually make sure that the system works.
And when they don't mirror each other,
then they don't mirror each other. That's what you have when you have then blackouts or explosions or things like that. So in the Spanish case, basically what happened was that we had the frequency, the grid frequency mismatch happening, and that was primarily because of maybe load coming on at the time and the demand not being strong enough. Now beyond that, so this matching. To make this matching work, you have what you call trigger points or grid code, which is defined as it's the rules through which the system works. So the rules actually say is that if there is more demand if there is more supply than demand, then you will shut off.
Mhm.
Okay. Or if there is a variation in the frequency, at this point you will shut off. And
These are rules that the grid has to make sure that nothing kind of
nothing
explodes,
goes
right?
on. So basically there are rules in the grid code where you have basically you have agreed certain rules. So every generator, you tell them that if the frequency drops or the voltage drops, till this point you will keep on operating it.
Mm-hmm.
Okay, because we know that we will have some other demand coming up, etc., etc. In Spain, what happened was that, and that happens with all generators, is because we want to protect our equipment, because the grid would like you to provide as much flexibility to them,
Mm-hmm.
but sometimes there's a risk that there's a risk that your equipment can get burnt out.
Mm.
Or have some damage because of the variations in the voltage or the frequency. So in Spain, people were not effectively following. Some people were not following the grid code. So what they did was when certain range.
So when you say people, that's people working on
generation companies.
Right.
Generation companies.
Okay. Right.
So the generation companies. I mean, I still haven't read the final report, so I can't actually conclusively say. But my understanding is that they had set their tolerances a little higher than what, a little lower, narrower than what the grid code demanded.
Mm-hmm.
And as a consequence of that, they shut off immediately.
Mm-hmm.
So when the frequency went out of range, they shut off immediately. They said should protect our plants. And that led to the cascade. So because the more they went off,
the more it's not.
It's cascaded, because when you shut off, the plant next door to you, his parameters also go out. So he hits his limit, he shuts off, then another shuts off, then another shuts off. So if you think about it, it's like you're on a domino there, and several of the dominoes decided to lean themselves forward at the same time, because they had not set to the minimum standards. And as a result, there was a cascading failure. Obviously, there were structural failures as well, because Spain, for example, had not put in enough spinning reserve. So spinning reserve is what keeps this grid number constant. So, there's a mechanical movement of the turbines which keeps this 50 hertz stable. So they did not have the spinning reserves. They did not have batteries to actually take some of that flexibility.
Mm-hmm.
So effectively, when the renewables were at a peak, one small cascade led to a major cascade across the grid, basically.
Okay, I've never heard the explanation, and it's super interesting to hear that. I'm quite proud to say that I'm from Mallorca in Spain, and Mallorca is one of the areas that didn't get shut down.
Because it's an island.
Because we're an island. I think we're probably on a different grid.
You're a classic battery solar candidate.
Yeah, I'm not sure how. I need to look into that. But yeah, my mum was there and she was like, "Yeah, we're fine." But we're watching everyone else go down in flames almost. But and I was also looking before I came to the studio. I was looking at the amount of investment needed specifically in the UK for grid upgrades, and by 2030, 2031, it says we're going to need $50 billion to $70 billion pounds, of course, and beyond the 2030s, we're going to need hundreds of billions of dollars more. And something you've put in your newsletter as well is that, let me read it. Investors have to start treating good investments as high growth opportunities and not focusing on generation plays only. That's quite interesting, I think. So far, are companies not treating them as high growth areas? Is that not an obvious
No, so I think the market is changing quite a lot. There's been a lot of private equity players who are actually entering this because it's a great return. Government guarantees you a return, and basically government has also raised the returns that they're willing to give, the cost that they're going to allow, especially in the recent Rio of Gem award. Now it is going to cost you and me £100 or more per year in our electricity costs, but that's a consequence of that. So after 800, I think the calculation was we'll go from around 822 to 948 or something like that. So that's what the electricity bills are going to go up by £120 or so. But it is a great investment because it's predictable. The guarantor is the government in most cases. Because you have a fixed return versus renewables, for example, which is a sort of a fairly, now with the curtailment and all of that, a difficult market to be in, a more difficult market to be in. Still a great investment. So I think that's there, and increasingly with the demand of electricity going up, electrification increasing, that 60-70% we talked about. It is not going to be possible for just the entrenched players to actually make all the investment. So I think it makes a good case for other investors to look at.
Who are the entrenched players?
So, for example, in the UK, you have the National Grid and SSE. They have licenses. They are actually doing most of the investment, and those are the guys who are still doing it. But yeah, so I think those will be the ones.
Okay. No, and when we spoke last week as well, you said that you were, I'm not sure if you finished your next newsletter entry, but you said you were doing a scorecard on Labour and what they're doing so far. Have you finished it?
Not yet.
Not yet. Do you know more or less what you're going to write?
Well, I think. Look, I'll go back to the energy quadrilemma. So I think I would say that the government is doing pretty well on energy security and sustainability, but perhaps, I think the scores on affordability and economic impact are low, and the reason for this is that if you think
on affordability and economic impact are low.
Okay. Yeah. So if you think about it, economic impact, I would say probably I'll give them a pass, but on affordability, it's a clear fail.
Yeah.
And the clear fail is because UK has one of the highest electricity costs in the world, especially for industrial. And what their actions have done in the last 1.5 years is going to actually take that cost much further up. And the expectation that the continuing expectation that consumers will continue to fund this is consumers and industrial consumers has also an adverse impact on the economic side of the equation as well, because we have already deindustrialized in the last 20-25 years. We're going to further deindustrialize because of the energy policies. Every time the government gives a subsidy to the industry to say, okay, we're going to give you cheaper electricity, we're not going to charge this bill, not charge this cost, they will then load it on to consumers. And that, in a way, makes the whole energy transition story negative. My own personal view is that the government had options, and it will come in the newsletter, but they did not consider those options when they were trying to take certain decisions. And that's the part of the reason where I think the government also needs to realize that there is a consumer or the other end who pays for everything. And they're expecting their policymakers to look at policies which optimize across all those four, not those two. I think the government got locked into their ambitious, sustainable goals, and all the choices they have, not all, but many of the choices they made, they've made some good choices as well, will only raise cost for consumers. So, I can name a few, nuclear, the big nuclear investments that they have done or they're planning to make on Sizewell C, the sizable grid investment versus, creating more distributed solutions that they're doing, the discouragement of batteries in at least the recent NISO awards, less awards than they should have done, etc. And the recent rises in the offshore wind, which is almost from a 41 pounds per megawatt hour has now gone to almost 90 pounds.
And what's brought that on?
Well, I think two things. One, the biggest one has been financing. So, the cost of financing has gone up from, we had interest rates which were artificially low for the longest period of time, 1 or 2%. So that's gone up quite considerably. There's also the cost of, there was a lot of intense competition between three players. My former company, G, has exited out of offshore wind. So that has allowed the remaining two players to actually also benefit from their exit. So there's less intense competition in that sector. and then the overall project costs have risen, and everybody's actually sort of pushing for higher projects cost at this time. If I look from a material to material perspective, there's not a huge change, but from a steel prices, yes, there's a bit of change in copper prices, but everybody's sort of pushed out because of labor costs and financing costs, etc., to drive the margins high.
Mm-hmm. And from the oil and gas side, what's your view on what's going on in the North Sea?
Well, I think, look, in the North Sea, there's a bit of an ambiguity around what the government policy is.
Mm-hmm.
You've heard noises around, we let you develop more fields, but you hear something one day and then you hear something the other day. My own personal view on North Sea is you have a resource. If you don't use it, you'll have to buy somebody else's.
Which is worse for the environment.
Which is worse for the environment as well. So that's also worse, and also the fact that you are actually, not, mining is mining. So oil is mining. It doesn't matter, you're mining gold or you're mining oil.
Yeah,
it's the same thing. So you let whoever is there who's willing to invest, you let them mine. And if there's no demand in the UK, great, let them sell it to wherever they can. But that does create jobs. Aberdeen has suffered quite significantly because of decisions taken over the last, and it's not just this government, it's been a consistent push after, especially Glasgow, that's there. So I think, look, and I think it's wrong logic to actually say that oil and gas is bad and we should not mine it and we should stop producing it. Because that's not going to solve the problem. You still need 82% of it in your mix. So effectively, I think there has been some good signals from the government. Let's see what happens with those. And if those happen, then we'll have a sort of a good outcome for investment in oil and gas, because both the taxation, the prices, everything is actually destroyed the oil and gas sector.
And you've said also that the government's done well on energy security. I know some people that wouldn't really agree with that, because they said, of course, we're now, instead of being reliant on Russia, we're now reliant on imports from Norway, for example, or even LNG from the US. What's your view on in terms of how they've done well on energy security?
Well, I think look, if you look at the government's plan for energy, so you look at what they're investing in. So there's a lot of offshore wind coming in. They've encouraged onshore wind, especially in England as well.
Okay, you're talking about what they're investing in
for the future.
Yes. Okay.
Yeah. So effectively, if electrification happens, as government gets more of their energy locally, I think it's going to be a big plus for them, because it's going to reduce their reliance on fossil fuels. It's going to reduce their reliance on imported electricity. But per se, I don't think imported electricity is bad. Having interconnectors with the Nordics or France is actually a good thing, because it gives them stability. It gives you greater stability in a network as well. So I think that's where they've done well. I think they've done also very well on sustainability. I mean, they've doubled the investment, or quite a big commitment to investment towards energy transition. They're likely to hit their Mission 2030 goals. So, I think that's all good news.
Yeah, interesting. And before finishing off, I wanted to ask you a bit more about yourself. Of course, we've spoken a lot about the market, but of course, I want to give people an insight into yourself and your career, and what advice you might have for people like myself entering the industry in the next generation. So I wanted to ask you, looking back, you've worked a long time at Shell, a long time at GE as well. What would you say have been, looking back, some defining moments of your career that maybe at the time you didn't give them credit for what those moments maybe meant for you? But looking back, of course, hindsight is a beautiful thing. But in hindsight, looking back, you think that was quite a good risk, or a good moment, or a good decision that I made, that maybe at the time didn't maybe seem so significant. That might be a difficult question.
So good decision versus a good moment.
No, like anything you think that you look back on, you thought that that decision or that moment may have played a bigger role in your future than at the time you gave it credit for.
Yeah, so I think look, probably my leaving Shell for GE was actually a very good decision. when I look back at it, because it gave me the opportunity to learn something totally new.
Mm.
And it was at a time when, so I had done very well in my Shell career. I was one of the youngest country CEOs
In Pakistan.
In Pakistan.
Because you went from being CEO there to then moving to G, right?
Yeah. And I was 36, 37 years old when I became the CEO, probably one of the youngest country chairs in Shell. My predecessor retired, just for a sizable country, retired. The person I took over from was retiring. So, that's the way country chairs work. So it was a good thing. And I was doing very well in my career. It was a very challenging in my assignment. The business had not been doing well. It was a turnaround. I did the turnaround. And then, the career within Shell looked set and bright. But the choice at that time, and it always comes back to how I see it, I place importance on three things always in this. So what impact you're making, who are the people you're going to be working with, and the learning that you have. Okay. And
impact people and learning.
Impact people in learning, or I would say people impact and learning.
Okay.
Because so I would say Shell had great people. I still have lots of friends. In fact, the other company that I work with, Affordability, we have lots of colleagues who are from Shell in that company who work with them, and I partner with them. So people were great, and I had a lot of respect for the people I was working with. I had a lot of time for them. The impact was where I started questioning myself. Mm-hmm. So I looked at myself and I said, look, if I'm going to keep on doing oil and gas for the next, I'm 37, I have probably maybe another 30 years to go in my career. If I'm going to keep on doing the same oil and gas, the same stuff, is that the right impact I'll be making? And that was a question in my mind. And the third one was learning. So if I've done really well, I've pretty much done every important job
in oil and gas
and what would I learn in the next 30 years? So I think that's what sort of drove me. And I loved Shell. I mean, I think Shell is a fantastic company, a great company to work for, even for people who sort of think oil and gas is bad. They've gave me a great career. I lived in so many countries, learned so much about the rest of the world, etc. So that's when I made the choice, and I said, look, perhaps GE, which used to have NBC Universal, healthcare, aviation, perhaps it's a greater home for me to learn. And I think that had a huge impact in my career, and especially on those three things which mattered to me. So I got to learn something totally different. I mean, obviously, yeah, that's how it is. So I think, yeah, that was the thing, and that's what I would say. To young people like yourself, I would say something very, very simple. The simplest thing is, if you are in a role where you think you can perform to your potential, or go beyond your potential, then you should pursue that role. Now, one of the challenges I see with all young people is that they hate the drudgery.
There was
the drudgery, the banal stuff of doing stuff. Everybody wants to be, when you used to work in Middle East, at a certain point many years ago, like 3 decades ago, every young guy you would want, and everybody would want to be a manager, so what you when you put through the toil, because you only become a master.
You have to do the dirty work first.
You have to do the dirty work. You have to, when you play squash for the first time, you will not hit the ball
on the center of the racket.
It's in the center of the racket. But if you keep on playing, you will get better. And most people today in today's world don't wait for mastery. So you have to put up with the drudgery first, But that is not to say that you put up with drudgery where you don't think you're not making an impact. If you're making an impact, if you're slowly improving, and you've got great people that you respect that you can work with. You've got a great learning opportunity. That is important. Impact will come. Impact is usually, when you're an unskilled person, it takes a while for you to start doing it. So, but you have to actually go through that cycle to get there. And I think with Shell was the same. I mean, I never imagined I would end up in Shell, but I ended up there, and I put through a lot of drudgery first, and eventually I achieved a bit of mastery. And I think that's the key to success.
That's good advice. And also, you said in the last in the podcast I heard, you said you try staying as close as you can to your 10-year-old self, because when your children are confident, curious, and willing to leap, because they don't really understand the risks and the consequences, how do you try doing that on a day-to-day basis?
Sometimes I don't also understand risks and consequences, so I'm not going to say I'm a master in that. I think it's the challenge always is as humans we have a certain base which is consistent, but we also change with the situation, the environment, the people we interact with, and I think in business as well as in your professional life, you sometimes have to be almost dispassionately pull yourself out of yourself
the outside,
and look from the outside, and look from on a bigger picture and saying, okay, if I look at it dispassionately, what does it make sense? Does it not make sense? Is this the right decision? And sometimes it's difficult. I mean, it's even difficult for me, even though I practice this continuously. It's even difficult for me because there's always this inner, what I'd call the reptile brain, who's actually pushing you to do something different. And I think that's the thing that we all have to work with, and we have to almost take a step back. And frankly, what I cannot stand is, so my own personal style is I never, even if bombs are exploding in my head, I would never show it. Never. People say I'm a great poker player. But the way I would do it is, you almost have to be dispassionate about business. You almost have to be dispassionate about those major decisions, and assume that everything is solvable. Everything, there's a light at the end of the tunnel. You don't have to panic. So I'll give you an example. I mean, when I took over this as the country chair and CEO of Shell Pakistan, I think it was the second month, we got an employee kidnapped.
Okay.
And we got kidnapped in Quetta, which was next to Afghanistan. At that time, there was a war going on in Afghanistan, and we suspected he'd been picked up by Taliban. And, we got I got a call on my phone asking for ransom. My assistant got a call asking for ransom, that kind of stuff. And I won't go into the detail, but, there's a methodology that we had of route crisis management. And it's only when you get into a problem that you realize that that's there. So in that, when we got into that, it was all about being dispassionate about how do you respond to the demand. So every call we used to have them, we would transcript it, write it, read it every day for 38 days. It took us 38 days to recover the guy. And and I wouldn't say it was like minuscule amount of ransom that was paid by the family. We recovered that guy. But 38 days we just spent looking dispassionately at what we had heard, what was the conversation, write it down, review that, and get to the conclusion. And I think it just taught me the value of being dispassionate about it. And a lot of people lose their nerve. I mean, there were a few people who lost their nerve, who would say, just give the money, just get on with it, or whatever. But we knew that, as a business, once you do it once, then you have to do it every time. So we actually had to play that. We had to respond. We had to think about what is the best way to respond. 3 or 4 people created a team, a crisis team, 3 or 4 people to do it. And we put a lot of people out who probably were directly related because they couldn't
deal with it. Yeah.
Couldn't deal with it. And I think that's the whole point. So every time you have a decision, just put it on a piece of paper and think about it.
Mm-hmm. And you say you still practice that way of kind of thinking. How do you do that? How do you suggest other people practice that skill?
I do that all the time. So I would, before, so when I'm going to a board meetings or I'm taking a major decision, I write an email sometimes to myself.
Oh, really?
Yeah. So justifying exactly what do I want to focus on, what do I want to prioritize, what is not essential, because when you sit on a board, there's a lot of non-essential stuff. In fact, the way boards work, there's a lot of information overload, but you almost have to see where is it that you're going to actually focus the impact on. So even when I make investments, I write a note to myself why I'm buying Microsoft versus another note, and it sort of just helps you. I have a template. I complete the template. I say, okay, this is the reason I'm buying Microsoft, and that's how I do it. And why is it a good time to buy? And that's sort of
gives you clarity, I guess.
Clarity, and gives you record as well. So you versus actually taking an impulsive decision.
Okay, perfect. 2 more questions. One is a tradition we have here. So this is a quote book. I love quotes, like inspirational mentality kind of things. So I want you to open the book at any page, whatever you want, and on each side there's a quote. So there's one quote on the left and one quote on the right. I want you to open it, pick the quote you prefer, and then read it out and tell me what that quote means to you. What's your thoughts of the quote?
So anyone and
yeah, any page. And you can, if you don't like either of them, you can open it again, different page if you prefer.
I think this one's good enough.
Yeah. Okay.
So I think I had 2 quotes. So the first one, which I'm not picking, is find ecstasy in life. The mere sense of living is joy enough. Mm-hmm. Okay. So it's a good quote. But I like the other one more, which is don't race for the finish line. Enjoy the journey. So it
links to what you said before.
Yeah.
And that's very interesting because actually every time that a guest has opened the book, for some reason, every single time they've opened it, the one they've chosen or one of the quotes is always linked to something they've already said, like you just did. So
yeah. So I think in careers, it's in life, it's always about enjoying the journey, and what makes the journey most enjoyable is the people you work with. Because that's the key element, and if you can find the right people to work with you, you've got your career set. Because that's really the most important thing. But if you don't respect the people, you don't like the people, it's time for you to
find something else.
Yeah,
love it. And as my last question, I always ask the guest to leave a question for the audience. So a question you think they should go away and reflect on something that we've spoken about today. It can be about anything we've spoken about. So about something we've spoken at the end, about your journey, careers, or about something specific about oil and gas, energy, renewables. What would be a question you would like to pose to them?
Yeah, so I think I would just probably say this, so I would say, a lot of us, and a lot of us actually feel, and including myself, sometimes feel, oh, maybe I did not make that right choice, or this is so bad for us. So the question I'd like everybody to ask themselves is, what is it that you're going to do to change where you are? And I think that's the question I leave with the people, because I think everything has to do about action. And if you don't like what you're doing, if your podcast is not working and the board is not listening to you, your business results are not good, ask yourself, what are you going to do to change that situation? And I think that's the critical question of pretty much everybody's life.
All right. Thank you so much. I really appreciate the hour and a bit. I think we've gone an hour and 10 more or less. And I will put the link to your newsletter in the description, because I think super interesting. I learned quite a lot, and I really appreciate the time. Thank you.
Okay.